So let me start, right? So the reason I wrote nHedge is not to confuse with various other hedging methods, right? Using straddle, using spreads, using uh, different duration trades. This is purely a hedge that I came up with. I probably 6 7 years ago I stopped using it. I used it. I've used hedging, this hedging, last 5 6 years, on off, right? I don't use it all the time. There are specific trades I use it. When it comes to BNB, I use it quite often for BNB. Other trades like scalp 3, normal scalping, I don't use it most of the time. For a lot of my swing trades, I use it as well. And swing trades, I hedge my trades when I expect market to move the other way. So I'm going to explain it. Why did this come across is, while we are optimizing our trading and while we're learning trading, we think of how to find the best trades, how to find the best setup, what are the win ratios, what are the risk reward ratio. But then we don't so much think about every trade. I mean, the group of trades, to make money, you need your winnings to be bigger, your losers to be lower, right? The number of losses to be less, as well as how much you lose per trade should be less. So there were a few couple days a while ago, I started thinking not about the winners but about losers, right? And if you've heard me many times, that's my primary focus is always about losing. When I look at setup, I look at where does it fail rather than where does it work. Because when it works, it's easy. When it fails is where it's hard, and I focus a lot on when it fails. That's why they think about context and things like that. So I thought about, okay, is there a way that I can reduce my number of losses, my loss? And I think about, yeah, yeah, a lot of people have already thought, right? This is, if I take both sides of the transaction, close one after when I find a signal, how does it work? That's where my this thinking originated, and I knew this doesn't work. That's too baby thinking. Then I came across, okay, why do I not try? I think there was one point of time I went through, I don't know, 3 months of losses, negative. Then I knew my confidence was getting hammered as well. Even when there was a good trade, I was hesitating to take. I wouldn't increase my trade size, and then I don't take the trade, and then trade goes my way. I'm like, okay, this is not gonna work. So is there somewhere something I can do that can help my emotions as well? If I don't have to take the loss then and there in 5 minutes, it might give me confidence. Then this is where I did some math, didn't do a lot of calculation. I thought I will do some forward test. It's very hard to do back test, but forward test. And I said, and I think I used in pound dollar was the transaction I did, yeah, because that's what I traded many years ago. I take a long trade, 10 20 points wherever my stop loss was. Rather than a stop loss, I put a short order, sell order. Yeah. And then once transaction goes into sell order, then the management comes. So that's a very quick introduction. The origination was purely to calm my emotion than anything else. It was never meant to make money. It was just me to enter into a trade, and after 20 minutes, once everything is died down, I can close both. That was my intention in the beginning. So if you go into next page, so what is an hedging? It is taking the opposite direction trade instead of stop loss. And the aim is either to exit near break even or at profit or less loss than what was originally thought of. So if you look at these two charts, I just put an example from last week's price action. I think this is, I don't know, Nasdaq or S&P. So you can clearly see the scalp 3 setup there. Yeah, takes the high, closes, about to go down. For me, I would look for scalp 2 failure as well, right? John, you probably enter there. For me, I don't do too many scalp 3s, so I wait for my confirmation. So I would want the price to come back and then fail. But in this case, let's say I'm anticipating scalp 2 failure, I allow for price to come back and I enter short. If you look at the next chart, you will see the candle is massively big. So now I know my short trade is failed. So rather than close there, I take opposite side of the transaction. That's what hedging is. Now what happens and what do we do? We'll talk a little bit later. Um, as of page 2, you understand what it is, right? Simple. Okay, next page. So why do we hedge and why do we not hedge, right? This is important because I've done probably I don't know, I stopped keeping track of everything, but actually probably 800-900 hedges transaction I've probably done, or maybe more, but minimum 800-900 transactions. It's been quite widely successful, but in the beginning it used to be quite hairy. So I'm going to explain the good, bad, and the ugly. Right? The good is it allows us to enter into trades with less fear. Obviously, if you don't have an instant, as a human being, um, the what is it called? The sweet in hand is better than whatever in the future. If we know the losses is not happening in the next 10 minutes, we are quite comfortable to take the trade. So if there is less fear of getting stopped out, your hesitation drops. So you can take a transaction with confidence, and you also have an option now that if the trade fails, you can actually manage it in such a way you don't lose, because now you have a hedge in place. You can do something later that gives you better options. So your trade now comes with an optionality. So that is a good part of hedging. Second, if managed properly, and if you're lucky, both leg of the trade can end positive. Third, my example, my results improved significantly, right? There were weeks, and I'm literally many weeks I didn't have losing days. But to clarify, when there were losing trade or losing days, it used to be 4 days, 5 days worth of losing days in one day. There is a massive losing days, but then because I've gone through without losing days for sometime months, it still worked out. So for me, it was wildly positive. But then I kind of started knowing what to filter out. If there was a very small scalp trades, like 10-point scalp trades, doing hedging doesn't work, because you just get chopped, and your focus just drains away from other trades. But if it's a bigger trade, it works. I'll come to that. Bad, the good, bad. Right now we're going into the bad. In an ideal world, if you really stop and think about this hedging, whether you use stop loss and just take the loss, or a hedge should produce similar result in an ideal world. Why do I mean? You take transaction 1, it fails. In scenario 1 you hedge, scenario 2 you don't hedge, right? You taken your 10 points loss, moved. In the next trade you would take the trade, make 20 points, done. But if you hedge it, what happens in this in when another setup comes, you're just going to close the hedge and come to the same result. How do I explain it? I'll explain this in an ideal world when we get to the last page. But for now, you understand, if you truly trade every setup the way it should be traded, your hedging versus stop loss should produce similar result. Extra cost, number 2 is extra cost, because now you're having to pay spread for your original transaction as well as for the hedging transaction, and then when they close, you're paying double the spread. Open trade distracts you from taking new good trades. It does, unless you trade like me, where the position size is so small, right? My position size is quarter percentage, 0.25 of my account. So I can have 8 different transactions running on the side on hedges and still keep on trading without caring, right? But if some of you risk like 2% or 2.5, and I hear people do 5 as well, which is crazy, even 1, after you go to 4 and 5, your mind starts getting pulled by what's happening with hedges transaction rather than real transaction. And then the worst one is the complacency creeps in, because now you don't have a fear of immediate loss. You start taking unnecessary trades, like, I'll try it anyway, what's the worst, I'm going to hedge it. Yeah, and you start taking a lot of trades that you probably shouldn't be taking. That's the bad. So you still have to trade the way you trade in your consistency challenge or your setup. But the only thing here you do to keep it in the good category is, the rules. You have 5, 6, 7 rules, and you follow those rules for hedging very meticulously. And the ugly is, there's a real risk of, and I went through for a while. Yeah. Once I started becoming good at hedging, that's why it's on and off, right? I said for a while I didn't hedge, even though it was successful, is because that, number 1, it actually screws up your discipline quite a lot. So real risk of thinking hedging as a money maker rather than a risk management tool. Because you start to think that the hedge also makes money, the original transaction makes money, and if you're lucky enough or unlucky enough to be stuck in a ranging market for few weeks, you start to think, it works anyway, and then you end up going in a trending market and screws you. In a hot trending market, losses amplify, right? I'll show you an example where I took on a trade, I hedged it, I closed the hedge, had to rehedge even higher. I don't know if that example has how many, but I remember seven. I don't know, maybe more, but seven. I remember I've had to keep on hedging higher and higher and higher, seven times. So it can get really bad. And then if one leg of the transaction is left exposed, it is as if trading without stop loss. Yeah, that's the ugly. And I've gone through all of this, and the reason I write this is because I've gone through all of those ugly and all the bad, and all the good as well. So my experience. So if we go into next page, so some rules in philosophy, it's not conclusive, exhaustive list, but here's how I thought about when I started doing hedging and try to optimize for me and think about things I need to think about and make my risk manager question me at the end. This is what I wrote. One is, as soon as your hedge goes on, you need to think that trade is a loss. Yeah. Now your job is not to make money, but just if you've already lost 10 points, lose 8 points. So that's your intention, or lose 10 points, but not more. In your head, you're not trying to now make money out of it. Otherwise, what happens? You go into that complacency and try to make money and screw up. Second is the same thing. The aim is risk management rather than profiting. For me, what has helped a lot is once that hedge is on, I don't micromanage. Well, in reality, I still try to manage it, but what I've slowly started to ignore it. Once the hedge is on, I ignore that trade, come back later on in few hours. Once my mind is cleared, I've done few other trades. Um, so that's what I've tried to do. So once the hedge is on, you ignore it for some time. Focus moves to the next trade. Don't micromanage. Never leave one side of the trade exposed, which means you buy, price goes up, price goes down, you short. It's a range market, it goes up again. Yeah, now your original transaction is in profit, but the hedge is in loss. What do? You don't take profit on the positive and then leave the negative, whichever side it goes, right? If you're every time you take the hedge off, you need to know beforehand when is the next hedge going off. Think of every removal has a stop loss, and hedge is a stop loss. So the urge number 5, if anybody starts doing this, you will really notice this. Make sure you write it down somewhere, right? Because we the urge to take profit on profitable position is very real, right? And if you've been scalping a lot, what happens? In scalping, full day you take, I don't know, 3 transaction, 10 transaction, 20 transaction. The chances of price coming back is so huge, so you close positions very fast, right? Both losses and profit. Even profits don't last for hours, right? You're taking profit in 5 minutes, 10 minutes. You see green, you're used to those 20 points profit, you're out. You start doing hedging, you see those 20 points move up in your hedged position. The mentality of you've been scalping comes in and you try to close it, and you got the negative. That happens a lot. So the urge to take profit is real. Beware, write it down somewhere, um, so you don't fall into that trap. So how you exit? There are multiple ways, right? You use your scalp 1, scalp 2, scalp 3. You wait for price to consolidate. So what I've started doing is, the last time we looked at price action when John did the presentation. Every time price trends, because most of the problem in hedging is when price trends. Yeah, I wait for the 4 hour to candle to close in the opposite direction. Yeah, 4 hour candle. If it's a green, solid green move up, the first 4 hour red candle, whenever, same day, next day. And we've also seen that every time there is a 4 hour or whatever, a big time frame candle closes, there is always a consolidation nearby. After that 4 hour closes, there is a time of consolidation. Yeah, I hope you guys remember. Nowadays, I've started to wait for that 4 hour close and then come back. try to sell near the highs in that consolidation, because my hopefully my hedge gap is like 20-30 points maximum. In the 4 hour candle I should be able to get 20 points, 30 points, and I come out. If the next 4 hour close is green again and goes up, I hedge again. Okay? So that's what I've started doing, for most of when I remove my head. Keep record of hedge trades. I used to do. Nowadays I'm becoming lazy, but I used to. If no successful resolution, this is my rule, but I don't follow all the time. Exit all trades by end of day. If there is no 4 hour close, I don't exit. If there is a 4 hour close, I do exit. Yeah. So that's the what I do, but that's the rule. And never losing does not exist. Just because there is this process doesn't mean you don't lose. You have to go with open mind that the hedge can be like 7 times bigger losses than normal. If you're used to losing 20 points, this can be 150 points loss. You need to think. But overall, across hundreds and hundreds of transactions, does it still work out? That's the question. For me, it worked out because I went through a lot of trial, error, pain, doing the wrong thing. So that's where I am. So next page. So next page is quick example, right? This is for my journal. This is, I don't know when is this, January 2022. I don't know what date I cropped it. But I just went to my old journals to pick out pages where I've done it. Yeah. If you see here, if you look at the first transaction, I went long that green arrow. Yeah. The green arrow, and if you look at the red arrow, I mean, I was doing BNB trade. Think about most of my thing is BNB, right? I went it. There was the green up bar coming up, yeah. Up bar. That's where I took my long, yeah. Well, arrow points to red arrow, but it's on the first green bar. I saw that there was a LLTT on a lower time frame. I took a green. My expectation was we'll have a BNB retest on the top, yeah. And you can see the whole yellow color is when the 8 a.m. or in Frankfurt time opens, the yellow box. So the first bar is 8 a.m. bar, yeah. That's the open bar. You can see the first bar, red bar. The first red bar, the small bar. Can you see the first red bar on the top? That's your 8 a.m. So in my charts, yellow color is Frankfurt Open. The green box is a US Open. Yeah. Yeah. That's how I do. So I was looking for a BNB retest, but then what happened? Price fell back. If you see, I bought, price came down on the red bar, the big red bar, or maybe even the green bar. I don't know when. So I put on a hedge there. Yeah. I already had a hedge, the limit order waiting. So it just triggered. Price kept on going down. There was another green bar, because I know this BNB retest happens pretty much right all the time. Very rare does it miss. I knew even if I put a hedge, I need to come out of that hedge quick because I know the price is gonna come up. So I'm always looking for any kind of reversal I take out. So I got into a hedge. I removed the hedge. Hedge got me 33.9 points, the first hedge. But yeah, then I had another hedge again just in case price breaks low. Price went down. So if you look at that, I came off the hedge. The green bar came up. So I'm hedgeless. That red candle came down and rejected, moved up. Yeah, the third one, which meant that I knew now this is clear for me. I put another hedge just below the red bar, that wicked red bar. No, yeah, that one. And then price came and hit me again. So I have another hedge going on there. Yeah, second hedge. When price started to move up in green, I had to close that hedge. So I moved up 31 points. So if you think about this, the two hedges earned me nothing. Price moved up. Yeah. And I knew because the price went down with such a force, and I was looking at US market at the same time, the scalp 3 is gonna just make mess of it. And the retest probably is not gonna happen. And I didn't want to carry the risk. I removed my long position. So here, if you look at this example, this is a sure pure loss, right? But if you look at the transaction, it was not a loss. I ended up making 11 points where I should have probably paid like 30 points or 20 points. I don't know how many points I had to pay. So that's example one. If you go to the next example, no, that's just a normal trade. So this one, yeah, this one, forget the first transaction because it was a long. I don't know what I did. Yeah, this was also a retest trade. It retested the first bar. I exited here, the long position, the first transaction, but because I waited too much for a pullback. I got 2 less points. But ignore that. Look at the second trade. The long, where is it? Yeah, yeah. So, no, look at the short trade. That's the, yeah, that one. What happened was price moved up, did the retest. No, didn't do the retest. It went to where the open was. It reversed and it was scalp 3. I was waiting for scalp 2 to happen. I don't know, for some reason I entered too late. I had a short position. But when price, yeah, short position, that was my entry 1, the original entry. But price started reversing then and there. So I had a hedge waiting, I put on a hedge. When the scalp 3 happened, yeah, when the scalp 3 happened, that green candle looks green now, but in 1 minute chart it was reversing down. So I exited my hedge there. Yeah, yeah. Within that green candle is a 1 minute head. I exited, but price kept going up again. And then I had another hedge waiting, so it's not me doing, it's automatic hedge at that point. It went up, and then I could see the wicks forming. There was a consolidation in 1 minute chart. The US was also starting to go down. I exited here again, and it was very quick. 1 point profit, and then price just hammered down. I exited very close to my entry. If you go to next chart, this is 11th Jan. Yeah, this is a horrible example. So I want to. This is a very trending market. Um, So what happened was, yeah, again, this is also a retest. So if you look at my BNB retest, although it's a red bar, so I knew I shouldn't be doing retest, yeah, but the first bar is red already, but I still did, yeah. Probably this was a downward market. To me, it was a scalp 3 fail on the top. From scalp 3, it's reversing down. I expected trend to continue. I put on a short, yeah. That quickly got me out at break even. Then when price moved up, if you, yeah, that was a that got out. This trade, this is for me was what did I do? I anticipated scalp to failure on the first move up, yeah, from the first high. I put on a trade, price went going up. So if you look at the hedges, it's too hard to explain, but I will explain. Hedge 1, hedge 2, hedge 3, hedge 4, hedge 5, hedge 6, hedge 7. I think probably this is the one with hedge 7. Every scalp 3 I tried to come out, price kept going up, so I had to keep on adding up. Yeah, I kept on moving up and up and up, and then I exited there. I'm trying to think, why did I exit? There probably is some reason why I stopped hedging after hedge 7. Probably I was like, fuck it, I don't care, or something happened, right? I don't know. But so that's what I did. And then when it starts to consolidate there after such a long move, I I forgot what, because this was a long time ago. Yeah, 11th January 2020. And there was a scalp 3. There's a bigger, higher time frame scalp 3 line. If you look at that line, there's a line. There's this line. Um, I wanted to gauge reaction. Yeah, I'm correct now. So after the last hedges I exited, there was a double top versus scalp 3. I wanted to see. I still would have hedged it had prices gone up, but it didn't go up. US market was about to pop in. Um, I said I will wait for US market. Let's see what happens. Then what happened? Price slammed down at US market. Yeah. And then, oh yeah, there's a hedge 8 and hedge 9 as well, I guess. When price start to reverse, I re-hedged it again and came out. I don't know why I came out. Uh, and then there was a hedge 9. Well, and then I exited at the end. But if you look at all of it, I don't know. I probably lost a little bit money or made few points, but for the amount of effort, and this day I did no other trade, just hedge. Because that's what I'm trying to say. Sometimes it distracts you from your trade, and you end up just in a very strong trending market. You get into this headache. So I wanted to show you an example. Next page. Okay. This is a more cleaner example, right? Forget the first. Forget the first transaction. I took on. I lost the money. Second transaction, I sorted. Price went up. It was. I think there was a scalp to failure there as well when I took the transaction, and then I hedged there. When I hedged there, this is when I decided I will just let go, right? I'll just let whatever happen, let it go. When starts price starts to consolidate in 4 hour, that's when I will take the transaction. I'm pretty sure there is a consolidation, 4 hour consolidation, because if you look at how long that market has been like that, on the when I exited my long hedge, yeah, that long hedge got exited. Look at the red arrow at the end of the red arrow, arrow. Yeah, so I exited there, and then slowly market fell off later on, and I both the transaction should have been, I don't know, 20 points loss, ended up making 82 points. Go to next page. It's gonna be a quick presentation. Now I think I asked this question in Discord. Back to the original example. Um, what would you do is the example, right? So you've seen, if you do this, you take scalp 3 trade, things fail, what would you do? And if you go to next page, which has what happens afterward in terms of price action, yeah, so this is what actually end up happening. Yeah, where would your ideal exit be, right? That scalp 3 exit, I don't know where the exit would be. So personally, my exit obviously would be I scalp 3 at that top. So you see the top below before the yellow box. We have a top just before the yellow box, yeah. And that is a scalp 3. I would definitely take a gander. Well, and by the way, you don't have to close all your hedges at the same time as well. If your position size is big enough, you can start to every scalp 3 you take out like 20% of hedges, yeah. Because even that 20% is, if like in this example you take 20% off, market slams down like this, you close both the transaction, um uh, you would have made enough not to pay any stop loss charges, even if you close like 20% or a quarter of your hedge transaction in every scalp 3. That's also another option. What you need to do is you need to sketch, you know how we did the context, some of the what type of price action we probably might end up seeing. If you want to, this is how you do, right? You sit down, try to think through different price actions if you are only doing for BNB, because if you look at my example, most of my hedging is BNB, yeah, as I said, yeah, because that's the time I know, because price moves so fast it's very hard to get it wrong. But the retest happens by 85% of the time. I know that retest happens all the time. Even if BNB fails, retest happens all the time. So I know if all I'm doing, my entry timing is wrong, so that means my trade is wrong, but there is a high chance it's going to come back. So rather than giving back money, if I just stay on the trade, there's a high chance I'll get it back. Sometime I might have to wait for hours and hours, and that's why this hedge works on BNB retest, and I take it most of the time on retest only, and you've seen my examples. Again, another, this is a hypothetical example. I didn't take it. I've done it few times, but I don't know what date did I do in the past to pull out my arrow journal. So I just saw this price action happen last week, so I just made an example, which is you scalp 3, you take a short, the first short, yeah. When price moves up again, because you already have a hedging position there, long hedge gets triggered, price suddenly moves down, yeah, you take another hedge below that, yeah, for long. Now your short is short, but you have a long hedge, now you're hedging that long hedge again, yeah, and you exit all at the bottom, near where the base or the base of the range is in a ranging market. Now, just giving you a hypothetical example, this is what you can do. The question is, how many times would you do? If now after your second hedge is gone, if the price again shot up, would you take a third hedge? To hedge the short hedge, right? In this example, it didn't, but in a very rangy market, it can happen. Price can just keep on going up and down, up and down. How many times do you do, and when do you say stop? Now let whatever happen happen. This is for all personally to work out, because there's no right or wrong answer. Yeah, it's personality, how big a size you trade. For me personally, I can do it 8 times and still not worry because my size would just be 2% by then. But this is the last example I want to add. So just to recap here, right? When do you use this? Is if you have a setup that has quite a high probability of working, like BNB retest, but then because price spikes so much, you can get a timing wrong a lot. Yeah, that's when this hedging works quite wonderfully. Second, exit is more important than entry of hedge. Yeah, because that's where things get screwed up. The entry, you are in a what 20 30 10 points loss, and you're locked. However price moves, you're locked. As long as you're locked, you know your max loss, it doesn't matter. As soon as you remove one side of the hedge is when the exposure goes up. So the exit is very important. For me, my exit these days, I've been more focused on exiting. I wait for that 4 hour to close. Um, also, well, every scalp three I still remove because my trade is only BNB retest. Yeah, because I know retest happens more times. But after I fail 2 3 times, now I don't go for 7 times. I wait for a 4 hour consolidation and I remove and call it as a loss trade and then leave it. But I try to reduce. I try to lose little lesser because in a consolidation, you can take scalp one, scalp three, and at least get 10 12 points lower than your overall loss. So that's what I do these days. I think that's the presentation. Questions. How do you think? Would you try it, or it's like too no too scary? You already do.
I would try for sure.
Yeah. So the thing is, you have to try it on a setup that actually has a extremely good win rate. And you have to complement this with a setup that works, but you get the timing wrong.
Uh, just a quick one regarding this very chart where you actually edged long at the top of the red wick. Um, it wasn't maybe a little too risky since there was clear not it's always easy to say in hindsight, but that was some kind of scalp to fader forming here. So longing to edge the first long edge on this chart.
Mhm.
For me personally, I would have never long here. I would have rather closed the first short and tried to re-enter for another scalp three probably.
Yeah.
Uh,
No, John, I agree. I agree. This is a hypothetical example, right? I'm giving you an
okay,
example. I didn't do
understood.
it.
Okay.
Yeah, I didn't do it. Well, I think about this. Logically, if you're trading range, forget scalp 3 for now. We have a very good range here, and if I expand this price action, that range has been going on from very early 6 a.m. in the morning. Every time it hits the yellow, it goes down to the yellow, and then comes up, and then goes down, and it comes up, and at the end of the day, it came out of the yellow on the top. It went up. If you were to enter the first red short bar, where would your stop be? Probably your stop
Oh
would be
yeah.
there where the long hedge is, right? Because you don't know what happens. Now you know about scalp three. A lot of people don't use scalp two failure, scalp threes, and all that.
Yeah. Yeah. Okay.
Yeah, that's what I'm trying to say. If by chance you happen to hedge, rather than price moving in the direction of the hedge, it starts to reverse and go in your. Because think the reason I like to hedge the hedge as well is only in one case where, and I do it on BNB, but I have a direction that price I want to head. You remember I keep saying when the market agrees to my analysis, that's when I go big. Yeah.
Mm-hmm.
When the market goes against my analysis, my what my setup is saying, or my scenario, my planned scenario, I don't go big. I exit and I wait. You hear me
Yeah,
say
yeah,
that a lot
yeah,
of
yeah, yeah.
times, yeah?
Clear, clear.
Yeah. I only go big when market agrees to me. In this case, I expected market agreed to go down. That's what I think. My market, there's a first candle decided to go down, so I'm fine. But when it moved up, I don't know. So I hedged it. Then market reversed, and now I have scalp to failure. I have scalp three, everything here lining up.
Yep.
What I would do, I would add another hedge to the hedge because now I know market is agreeing to me. There, the setup is also helping. So rather than watching, I will just put on another hedge to now, because what happens then? I have a short, I have a long, I have a short. So if the market goes where I want it to go, the two shorts are gonna help the one long. So net net, I still come out positive.
Okay, okay, okay. Clear, clear. Thank you.
Okay, one by one, let's go. Now, Doji, is there a way to test this?
Um, yeah, I think there probably is, but it's I wouldn't know how to code it really. I mean, the rules have to be very defined. So I'm not really sure how the set of rules would look for this. I can try to check the BNB maybe because that's quite it's a very limited time.
Yeah.
But then it
Yeah,
would help if I had more defined rules, I think.
okay. Yeah, it's hard to define. BNB, BNB, the retest, I think we can, not the BNB original, the normal BNB, which is the reversal. We have a BNB retest. I know, you know that, eh?
Yeah, is that different from the are there different BNBs?
I have three different BNBs.
Ah, all
So,
right. Yeah, I'm thinking one about the one return to open BNB
yeah,
thing.
so the number one BNB is whatever the first bar candle that gets reversed. That's your BNB, yeah?
Ah, okay.
But BNB retest is whatever the first bar keeps going. It doesn't reverse.
Yeah.
85% of the time, and I've done I don't know 2.5 years worth of data. Price comes back to test the top of the first bar before moving. The very 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 rare that DAX, at least in DAX, once the first bar is open, it keeps on going. For today, for example, it hasn't retested. Yeah, I don't know if it's done later on, but when I looked in the afternoon, it hasn't retested. The first 5 minute bar, uh, it hasn't. It's 15509. It came one half a pip, half a point to it at 8:25, 30 minutes later, but it didn't retest. Then I've looked at this retest. 85% of the time, it comes to retest that line at the very minimum before reversing or doing BNB. So for BNB retest to work, your BNB should not be complete. If BNB happens, the retest is anyway done, right? So that's a retest and reversal. But when, for example, today there was a red bar at open, second bar is red, third bar is red, and then the green. But the green didn't come and touch the first bar. So the touching the first bar is what I call retest.
Okay. But to test out the hedges, I mean, if you just look at this one, instead of if you would exit the long hedge instead of adding a short hedge to the long hedge, the you would get the exact same result, right?
Correct. Correct.
Yeah.
As I said, right, stop loss or hedge is in an ideal world gets you the exact same answer.
Yeah.
Yeah.
So I mean, just testing the back testing the hedging idea, I think is
Same as stop loss.
yeah, it's the same as a stop loss, but it for psychology, it's very important. I think it's a big difference, but that's
Correct.
difficult to backtest the psychology.
Correct.
Yeah.
Correct. That's true. That's too difficult to back to psychology. Okay, anybody has any question earlier in the pages? No question. Would you want to try it?
I think for my part, I would first learn to take a real stop loss and be good at that one, and then when I'm good there, I shouldn't need this, right?
You shouldn't need this. No,
I don't know. It's a question.
no. So look, if I think about BNB retest at least, there are some setups like in the retest trade, I found this helps. So what happens is you don't know how many because you're just coming out of the open. There's a lot of jiggy zaggy and every price is trying to hit your stop anyway, right? Yeah. So what you do is you anyway accepted you've taken a loss, but you keep your option open. Yeah. Because once what happens with BNB is because it's like the first 30 minutes, once price moves, once you take a loss, you don't want to re-enter into that trade because you don't know when it's going to come up, whether it's when you hedge it, it keeps you in the game longer. That's what I found, and actually, profitability wise, it definitely helps on BNB retest. Definitely.
Cool. Yeah, it's worth trying. I should try it on a demo account first, I think, to not mess up too much.
Um, I have another question that someone might get as a kind of gambling question, but let's imagine we are just before a CPI release news or any big news. Uh, would it make any sense to actually open right before the very news two position, one long and one short? Then, as soon as the direction of that very news it's let's say clear, close the losing one and let the winning one run for some more points. I know that this is probably has nothing to do with edging. It's more like trying to assume that one way or another you make some points out of such a move. I'm taking a news event, but it could be even an open with a sudden move to the upside or the downside. Does it is playing gambling or can make any
Gambling,
sense?
definitely gambling.
Okay, okay.
Because the reason it's gambling is what you see. Here is the difference between gambling and not gambling, right? If you have a process you can repeat every time, it's not gambling. Because then you can say what the payoff of that process is. The payoff works for you. It's not gambling because ultimately all trading is gambling because we are putting our money on things we don't know, right? It's in the future, right? In logically, if you ask my wife, she'll say it's gambling because you don't know. Yes, you have a process, you've done some study, but how do you know? Actually, I don't know what will happen. Yeah, you do math, you do calculation, you say scalp 3, oh, it happens 69% of the time. But who knows? Sometimes there are 3 months that 69% is not right, it's like 20% is. And there are times when it's not 69, it's 83% is, right? On average, it's 69 for BNB. So here, what you're saying, market open definitely doesn't work because there is BNB, it reverses, yeah.
Yep.
CPI, if you remember last CPI, price went up, price went down, price went up,
Yeah.
price went down. Yeah.
Yeah.
It
No,
was,
I was quite sure of the answer. I just wanted extra confirmation, you know.
no, yeah.
Yeah. Go
Yeah,
ahead.
I think it's the process. If and this is that is easy to test, by the way. Yeah, and
Yeah.
Logi can definitely, the PRT can test it. Right after 30 points move somewhere, you what you do is you take same transaction up and down at the same time. Let price go up in one direction 30 points minimum, and then put a stop loss. If it's gone up, you put a stop loss of long at break even. When price slams down, with the slam down, you've stopped out. Yeah, it's so dangerous though because your slippage is gonna be so tight. This is something PRT probably cannot test
Yeah.
because the slippage is just gonna kill you.
Yeah. Okay. Okay. That was the answer I was expecting. Thank you.
Yeah. Ultimately, unless it's repeatable, this is something I keep saying, right? If you cannot do it tomorrow and the after tomorrow, or every time this similar thing happens, then it becomes gambling. Anybody with any question?
Not a question, but just I've tried this before, like before I knew the way you do it, Nepra, and I think mine was more. My closes were more gut feeling. My opening was for the same reason. Taking stop loss is emotionally more difficult than hedging it.
Yeah,
And you know that worst case scenario is if you close both the things at the same time, your stop losses where your loss is more or less the same.
correct.
um, and I've successfully done it, I would say, but it was more a chance than a system, because my closing, there was no solid system to it. It was more like it feels like the market has, and I think the feel comes from the same thing that you say, after 4 hours it consolidates, so you see it's consolidating in your feelers. Either it will reverse or it will at least give you enough time to whatever the differential between the hedges to make that up. I would close one or the other. Most of the times it has worked. Sometimes a small loss, but nevertheless less than the stop loss.
Yeah.
Not scientific.
Yeah, and there's a bit of trial error as well. I showed you example of going 7 times, right?
Yeah,
Market is the ultimate owner of all this, right? Because if market doesn't agree, you decide how you react to it. You let it go, then you're in a big trouble.
yeah,
You keep hedging, which is also a big trouble. In that example, had market kept on going up, I would have had to hedge few more times and then maybe exit after 13 tries. And then every exit versus, every time I exit and put on a new hedge, there is probably 5 to 20 points gap. Yeah, sometimes
yeah,
5 points, sometimes 20 points, sometimes less than, sometimes minus point as well, because some of the hedges was way down.
yeah,
But I probably would have paid not not a loss for one trade, but a loss for 15 trade in one shot. Yeah,
yeah. True,
but mind
true,
you,
true.
because I knew this happens, by the way, right? So there's a slight difference. I'm already prepared for it because I know of the 50 losses, I don't take for 40 losses, but one loss I take 15 losses. I'm eliminating 50 losses and taking 20 loss one shot. It's still okay because the payoff still work. You get
Yeah,
my point? But
I do.
you have to accept that the losses will be huge when you take the loss.
Yeah, yeah. I mean, there are two reasons I didn't do it much. One is it's emotionally very draining when the market is trending in whatever direction, one direction, because you have both positions and you're like, I don't know when this is going to get over. Uh, and then the second is, more importantly, is that it distracts you from the meaningful trades that you see, but because either your capital is locked or you're just too involved in trying to micromanage the hedge, it becomes too draining.
Absolutely, absolutely agree.
That's just from experience. But I would try it again, because now there is a bit of a system to it, so I'll try it again.
Yeah, no, if we combine, that 4 hour rule, the what Hugh taught us about the support and all that, like the base bar, base of the
Yeah,
trust bar. We looked at various things. Some of um, in the channel that John taught us, right? That after the third touch, you need to look out for some kind of a reversal. Yeah. The clustering of highs, lows, scalp threes. We have various method, but
it,
if done really properly, like the way coding the coders work, like how Doji thinks about it, it's actually the same thing.
yeah.
Rather than taking a head, just take a stop and then re-enter where your thing should be. It has to be the same result. The reality is it's actually the same result. But well, hypothetically, technically, it's the same result. The real answer is never same result. Yeah,
And when machines are doing it, they don't have emotions, right? Whereas when you're doing it, that emotion, that is, for me, that is the biggest thing. Technically, yes, the result will be the same, but if you can code it and you have system working behind the scenes, it just takes care of itself. But when you have to actually click a button to take a loss, or whichever way it is, there's always this emotional aspect which I struggle with, if I'm honest.
everybody does that. That's what makes us human, right?
Yeah.
We do it. Everybody does. If I take three losses in a row, fourth transaction, my head is also thinking, what the hell? Yeah.
Yeah.
or maybe today I'm not reading the market right, or yeah. And with the hedges, at least you are in a. Oh, by the way, there's another big learning that I forgot to put in. When you have hedges on, you when you take a loss and you go out from your screen, you watch your TV and all that is done, right? Or you look for transaction. If you take two losses, three losses, if you follow proper rule, you're not trading. You go with the hedges on, you still have a transaction, so you're still looking at the screen. So there is a little bit of a learning element to it as well. Because now you're watching the price. That I forgot to add, and that actually is helpful. Okay, I managed to finish my presentation in an hour, unlike you guys.
You're the master also in this.
Perfect. Okay. No more question. So obviously, so you know what? Now slowly, I'm gonna maybe in another 3 4 weeks we'll add few more people, right? Probably another 10 people. Now that we have a process in place, once we have all of them in, we're gonna recap few things, right? Maybe do 15 minute on this, 15 minute on John yours, on Hughes, on the context page once again for anybody who joined new. Quickly, just not go through everything, but hey, here are the main points. So it's a recap for us as well, recap for others as well.
Okay.
So next week, I know Amana didn't join, is liquidity related. Hopefully, he's managed to do it. It's quite a hard topic. And then, Afsal, you done your test, back test? Done the math?
Um, I was dreading that question. So I've done parts of it, and it's not looking very promising. I've done Monday buy and Friday sell. That was very straightforward one.
Mhm,
I can talk tell you guys result. I have had 680 plus data points,
mhm.
and the net result of that is 55% win rate,
Okay.
which is at for that many data points is not great. But when I divide the net result by the number of trades you would take, it
Mhm.
comes to about 9.7 points. So 9 points, I would say, with your spread and all that, or 8 points.
Ah, okay.
Almost the same result for Monday and Tuesday buy and Friday sell. The win ratio goes down by a percentage point, and the net points also go down by some minor points. So it's still in nine, both of them. Monday, Tuesday buy, and Thursday, Friday sell is a bit of a tricky one. And then I decided not to do the stop loss one, because if you add the stop loss, the loss will go even higher, right? Because you will get stopped out, and therefore it won't be kind of. I don't think it will be meaningful. So if it is almost a flip of a coin,
Mhm.
um, I'm not sure if that would work. The only thing remaining is Monday buy, Thursday sell, and Tuesday buy, Friday sell. The tricky bit in this is when the market, is not all 5 days. So then the way I had worked it out in Excel kind of throws up weird things, and I had to rework it. There are quite a few days when either Tuesday is closed, or Monday is closed, or Friday is closed, or Thursday is closed.
Okay.
You have to
That's
really.
it's the first day of the week buy, last day of the week sell.
Yes, yeah, yeah, but doing that was a tricky bit, so that's why I'm lagging behind on that one. I'll figure it out, but yeah.
Okay. I still, let's look at it once. The as I said before, right? When we are in search of trading edge, what we're not looking for a direct transaction all the time. When who solved it, the was solved it, isn't it? The round number.
Yeah.
Yep.
Yeah. Yeah. So some of them are easy, like okay, it says if you do it, it works out, and you use 15 minutes short. But some of them are not. So 8 points, it still proves there is an edge, right? Small edge. Now, yeah, what happens is, as a filter, so when you take a trade, you start using that as a filter for something else. You're layering edge upon edge. So what happens is, you already have sorry, we already have, am I hearing myself? We already have uh, I'm hearing echo, my echo. So have scalp 1, scalp 3, scalp 2s, BNBs. Now the base of the thrust bar, I'm still testing it. The round numbers, we already have like hundreds of trade, yeah, yeah. And then there are so many other trades we can lean on and test and learn. The Darren's 3CR and all that we can learn, right? Doji might have his setup. He'll explain to us. We don't want too many trades, yeah. It's not that we don't have too many. We don't have too many opportunities. We have it. What we're trying to do is, like, based on the thrust bar when we buy, does that support us as well, right? Does what you do, Aslam, does that support us? And is there anything else support us? And we can layer upon few edges which are tiny, but once we layer up, the probability goes up. Yeah, and not everything gives a direct answer. For example, CPI wasn't directly tradable like last time we talked, and it's fine. In that case, we avoid it, and that is also an edge. Not trading or not doing a trade or ignoring something doesn't work is a massive help. A lot of people I still can see on Twitter, right? The turnaround Tuesday, they trade it. It's not just stock. Sometimes they just trade it, assuming it happens. Actually, it doesn't happen.
Yeah.
And avoiding those, like some people say Friday don't trade, and Friday actually is the best day to trade.
Indeed.
It's knowing all that.
That's what we learned from our my first working.
Correct. Unless some of the things we need to just do the work, verify it, right? And this is where having a gang helps. Yeah.
Yeah, yeah.
This is
No, I will finish the last bit, and I'll also kind of do some more analysis on that in terms of just slotting the market between. And I've done this only on DAX, by the way, so I need to try this on Nasdaq. Once the setup is there, doing the remaining indexes is simple.
correct. Perfect.
But yeah, that is how far I have gone with that.
Okay, perfect. Well, so now we got next week that liquidity. Hopefully, after that, Aslam, I think you don't need an hour anyway. Um,
No, I
very
can
quickly,
just
just yeah,
come on a ride with somebody for 15 minutes.
yeah. What else do we have? Uh, Price action. Don't even know. I call you price action. Anything you are working on? Where I had my list of things. I don't know where it is now.
If you wanted me to go through the indicator and the back tests on Scalp 3, I
Oh
can
yeah,
do that.
that would be very helpful.
So that's I'm ready to go whenever you want me to.
Perfect. Can we? Next week we leave for Anama trader for liquidity, because that's quite important. If he's not done and if you're ready, we can do that next week. Yeah. And Doji, can I ask you one thing? If
Sure.
filter, I don't know how. So think of this chart you're looking at right now. Yeah.
Yeah.
As a 4-hour chart. Just to one of the in your test, one more test. Can you just add? Yeah.
Yeah.
The
What do you want
yeah,
to add?
the one more, just one more condition to add, which is, you think about this is a ranging market, but assume that from after the long hedge is done, price goes down as a trend moving down, isn't it? Red, yeah.
Yeah.
Think of this as a 4-hour bar. Can you see that green like spinning top in the middle?
Just below the short hedge for the long hedge.
Correct. After the
Yeah.
big
Yeah.
red bar. Yeah. After the big, yeah.
Exactly.
Now your filter is, you only take scalp 3 once in a trending market, once a different color direction bar comes up, and only for 4 hours.
Okay, so the action time frame is still 5 minutes, but I look for a bar, a red bar on the high time frame.
A red bar or a green bar, it should be the opposite of the trend bar.
Yeah. Okay. Yeah.
Yeah. And
Would you
your
mind?
and your
Would you
trade
mind
time.
writing that down for me so I don't misinterpret it? And you can send it as a DM to me, maybe.
Okay, I will do that. Yeah.
Yeah.
And you only have 4 hours to trade.
Yeah.
After that bar is printed, you have 4 hours to trade, and then your trade is done for that day.
Yeah, sure.
Yeah. It works quite a lot for me, so I'm intrigued. Okay.
I also tried to start to create some kind of context filter. It's really tricky, of course, because they are lagging quite a lot. So it's a lot of things when you trade live, you can kind of feel the change in the structure, but when you backtest it, you need like 5 bars confirmation to get a top confirmed and that kind of stuff. So it's really slow, and I'm going to try it, but I'm not sure if it's going to help anything.
No problem. And I'm trying to think if there's a way to simplify. And this 4 hour is me simplifying, right? In a trending market, when there is an opposite bar, it means that that's a ranging condition. Market, the last 4 hour has ranged. That's what it means. Yeah. And that's what I'm trying to do. Give you that. That's your range. Now you have a condition. The context is ranging. It it should help. It should help the range kind of setup, which is scalp threes and scalp ones. I will write it down. Okay. Okay, guys. Anything else before John switches off the recording?
Great one.
Yeah, thanks a lot.
Thank
Yes,
you very
thank you very
much.
much.
Thank you very much.
Thank
Thank you,
you.
guys. Thank you, Nepra.
Thank you. Bye bye.
Thanks, guys. Bye.
Bye.
Have a great
Bye.
one. I'm stopping the recording.
Yeah.